So what I'm looking at here, just so you understand what I'm thinking, the market came down, tested the 50-day, held, bounced, okay? Put some capital to work. Until the last 25 minutes yesterday, that looked like a good decision. The market was consolidating, and then all of a sudden, it sold off here, rallied back. This was normal type of action. And then it just imploded in the last 25 minutes for reasons nobody can quite tell me. But I'm going to get to a suggestion of what the reason is in a minute. All right, so what do we do now? We always knew, if you were going along with me and adding some names to the portfolio yesterday and the day before, really yesterday is when we added, the day before, the indexes. And don't forget, we bought the indexes right off the low the day before. So we were looking at buying them right in here, if you could see that. So the reward to risk, right? The ARMR portfolio, the ARMR investing way is all about putting capital to work when probabilities are at their highest and reward to risk is worth it. So probabilities were not their highest. That's when the risk monitor goes green, right? But there was enough evidence for me to say, okay, I'm going to put some indexes in the portfolio in advance. Now that really worked for us in March. We took positions in advance. Risk monitor went green. We already had positions on, the market went up. We had a nice run. Okay. So this time it may not work. It's okay. We know we put the positions on close to the stop. If it goes below the put wall today, we're done. Trade's over. So how do we trade today? I don't make decisions. I don't take positions out of the portfolio at 9:30 when the market opens. I don't care if it's below stops, right? Because statistically speaking, 11:30 is the time that matters. It happens over and over and over again. Will there be a day where you wish you sold at 9:30? Absolutely. 1 in 100, the market will just implode. But statistically speaking, the market will set a bottom in the first 2 hours and then test. And so we can always remove positions on the bounce. Or what I like to do is I use the low of the first 2 hours as the daily stop. So if we go below a stop in the first day of the first couple minutes of trading, I look at the first 2 hours of trading. I let the market trade for 2 hours. Then I use the 2-hour low as the stop for the day. And I use the original stop at 3:30 to exit a position. So if we're above the low of the first 2 hours by 3:30, but below the original stop, I sell it. You follow me? And what we did was we did better than the first 2 hours of trading. So the market's going to implode. It's going to go right down to the put wall. 405 is the put wall on the S&P. SPY is the ETF. It's going to open at 407. That's another $2 down, right? So it's down 1% at the open. It could sell off another 0.5%, 0.75% to hit the put wall. We know from trading with put gamma information, all kinds of gamma information, that the put wall is usually the greatest place to buy a market, not to sell a market. So if we plummet down to the put wall, the probabilities that the market will bounce off of that level is high. Now, it might roll over and implode by the end of the day, but we would expect from a probability standpoint a bounce. And then if that bounce fails, it might implode. But that'll give us an opportunity probably to take positions out if we have to, somewhere around the prices of where the market opens. See, one of the things you got to think about is the market gaps down. It's already down. That money's lost. So it's a question of what happens next. And from a probability standpoint, the market could open at 207, let's say, on the S&P. It could drop to 205 and close the day at 207. So if I sell it at 330 at 207, what did I miss? Nothing, except for leaving the market in a position to see if it wanted to resolve to the upside off of that put wall. Does that make sense? So that's the way I'm trading today. I'm not responding to the collapse this morning. Okay. I'm expecting the put wall to hold. I'm expecting a rally into Friday. The biggest gamma location is up, 420 on the S&P. So it would just be strange for it to just absolutely implode. And if it does, then what that'll tell us is the risk monitor red is right. And we have a real correction underway. So the market's been fighting this, non-confluence, which is making this year much more difficult than last year. The Dow, the value, the small cap, the S&P goes up. Meanwhile, innovator funds collapse, momentum funds collapse. Okay. So and this battle continues, is the rotation going to lead to new leadership that can drag the market higher? Or does the collapse in risk assets start to bleed into the rest of the market. If it bleeds and we close down here, this will be the last day that we have money to work. I mean, we're going to be 100% cash again in the index only portfolio. So we'll take a hit one day and we'll be out. Okay, no big deal there. Now, the swing in the invest portfolios, they already have cash. We're overweighted precious metals. We'll see how they respond in a market like this. Right now, they're getting whacked with the market because we got risk off everywhere. But gold is flat on the day. So we'll see where those things trade. They created mad alpha first in the last week. So we'll see if they hold these levels. We have Coke, McDonald's, right? We've got the pipelines, we got Teledyne, and we've added a number of big cap pharmaceuticals. These are low beta names. So while we'll see them go down with the market, the reason they're in the portfolio is that we're expecting those names to catch money in a time like this. They may not. Look, if the selling gets bad enough, you're going to get margin calls and everything's going to go down. And we're going to get stopped out everywhere. But it's too early for that conversation. So we're not going to manage our P&L today. We're going to manage the positions. If a position hits a stop, we'll take it out. If a position doesn't hit a stop, leave the position alone. It's already risk monitor red. So the only thing we have to do, if anybody's with me, I don't know if you guys are, but for my index only portfolio, when I put that capital to work, I was willing to risk to the put wall. Closes below the put wall, I'm out. Okay, so that'll happen. Now let's get to a major area of concern for me. And I've been sharing this information for the last few weeks, maybe longer. Cryptocurrencies are not an asset that will protect you as the market goes down. Cryptocurrencies are a high risk asset. When the market deleverages, those assets are going to get killed. I've been saying that over and over. And I understand why some of you don't want to hear me because, hey, I didn't make any money on the upside in crypto. So what do I know? Okay, but I'll tell you what I do know. The ARMR reported about managing risk. Whether or not Bitcoin and cryptocurrencies replaces all other fiat currencies at some point in the distant future is a fun conversation, and we can all debate it. But that's got nothing to do with managing risk in the here and now. Okay? So when Bitcoin was 60,000 and everybody's telling me I'm stupid not to own it because it's going to go to 100,000, I'm begging you to protect your assets. And this is the reason why. Bitcoin's down, 32% in the last 7 days? Ether down 37% in the last 7 days, and something like 26% or something overnight. Those are risk assets. Those aren't assets to protect your portfolio. And by the way, they're not assets that are going to replace fiat currency anytime soon. If an asset can drop 30% because a billionaire sneezes on the idea, it's not an asset to protect your portfolio. It's a risk asset. You want to trade it. You want to make money off of the trading. I get it. Okay. More power to you. I hope you much success. I wish you much success. But just understand the asset you own. Don't pretend that it's some wonderful asset that only goes up, right? That'll protect your portfolio when equities go down. I mean, come on, guys, come on. Let me tell you, this is just an aside. This makes me very uncomfortable and why I've been ratcheting up this warning sign over the last couple of weeks. And it doesn't make me feel good to be right if it means you guys are losing money. I mean, I hope you're not losing money. But I have a longtime friend / client I've been managing money for like 28 years. He's a great guy. He has no interest in understanding the day-to-day of investing. He's not like you and me talking about it every day, watching things trade. He lets me do my thing. We have a friendship, and it's been a successful one for 28 years. This is what really disturbed me. 2 weeks ago, he called me, and I manage a number of accounts for him. He wants to take one of the accounts. 2 weeks ago, he called me. Bitcoin was 60,000. He wanted to take one of those accounts and put 100% of the money in Bitcoin. Now, I can't talk him out of it, and I'm not going to. It's his capital. He wants to do it. He can do it. I told him what I tell you guys. He's convinced that it's the new currency of the realm. Luckily, it took 2 weeks to set up the new account. So Bitcoin's dropped from 60,000 into the, was it below 30,000 now? I don't know. I've been below 40,000 now. I don't know where it is now. Somewhere. So it's 34,000. Bitcoin's down. Now Bitcoin's down almost 40% in 7 days, and it's down 21.5% overnight, and it's trading at 34,000. 34,000 now. Okay. And instead of that deterring him, he's still going to do it. He thinks he's getting it cheap. Hey, it was 60,000 2 weeks ago. Now it's 34,000. Hey, it's cheap. But my problem with the decision, look, and I respect everybody's own plan, their own risk tolerance, and what they're trying to do. But what disturbs me is when, and he's not the only one, by the way. I've had a lot of people in the last 2 months tell me I'm crazy for not owning Bitcoin, trying to convince me to put my money in Bitcoin and other cryptocurrencies. And these are individuals who they don't spend their whole life investing. They're not all about investing. They do other things, right? So they're really not, they don't necessarily even pay attention to the world of investing. They're successful people in their own careers. They almost never call to tell me what to do. And in the last couple of months, they're all calling to tell me what to do. And they're all telling me I'm crazy for not owning it. Am I still crazy? 60,000 to 34,000. I can get that kind of volatility in a stock I own. And that's just Bitcoin. And it's manipulated. It's manipulated by a billionaire. I've said enough on this issue. But this is partially why the market is imploding. Because when you get a collapse in crypto, which is the risk asset that everyone's got tons of exposure to, and you get a collapse in the innovator stocks, and you got all these accounts on margin, we're at risk of a deleveraging event. That's why if this market closes below 405 on the SPY and goes below the put wall today, we're going to rip a lot out of our portfolio. As things hit stops, I'll raise stops. I'll have more cash because it's going to get ugly. It's going to bleed into the rest of the market because you're going to get margin calls and this, that, and the other thing happens. Please recognize what the asset is. It's not cheap just because it's gone from 60,000 to 34,000 in 7 days. What that should tell you instead is this is a high risk asset. You want to play it, that's great, but know what you're playing with. That's all I ask. It's the ARMR report. It's algorithmic risk management. It's risk management. You got to protect your assets so you can make them grow. Once you build a hole in your assets, it's very hard to climb out of it. And that's why the ARMR report is about protecting capital first. I'm going to miss some upside on things. It's going to happen a lot because I care more about protecting the money. You're going to see me go in and go out of the portfolio in some years, protecting it so that I have the bulk of my assets when the next cycle starts, and I can be putting money to work, and I go to net new highs in my net worth while others struggle just to get back to break even. This is a marathon run, and it's about protecting capital first. Okay? That's all I got to say this morning. Any questions, I'll answer them, and then I'm got a lot of work to do before the open.